This is where the idea of a potential trade or tariff war really kind of comes in because Trump, of course, has very preempted that statement by saying, if you guys want to put tariffs on us as a reaction to us putting tariffs on you, then we're just going to keep escalating. Where does it stop? And certainly, I think that some of these things on the good side are probably more one sided because, of course, probably I would say Canada is somewhat more dependent on some of the goods making its way from the US into Canada. But, we have a lot of intermediate goods that kinda go across the border on both sides as well.
We all want to believe in something. In Chinese, belief also means trust. We want to trust our systems and each other so we can build a future beyond what we know. Join us at Consensus Hong Kong, where belief becomes real.
Hello and welcome to Markets Daily, hosted by me, Jen Sanasi. On this show, we navigate the currents shaping the crypto markets, providing insights against the broader financial landscape. So, whether you're actively trading or simply fascinated by the volatility that is the crypto markets, this show is your compass to understanding what's happened, where we are, and where we're going. On today's show, we have Coinbase Head of Institutional Research, David Duong. Hey, David.
Hey, Jen, good to be here.
Good to have you here. And what a morning. It's just been a sea of red across the board on the back of Trump's tariffs on Canada, Mexico, and China. So let's just start there. Make sense of what's going on in the markets this morning for me.
Yeah, I mean, this has been ongoing now, I think, as far as crypto markets being sympathetic to what's happening in the TradFi. And this has been happening probably since the executive order, because certainly I think a lot of people now are uncertain about what the timeline looks like for additional crypto specific catalysts. But more importantly, I think over the weekend, there was nothing else trading. And so this is the typical crypto trading as a proxy for broader risk assets. I think some of that will correct as markets open in the US, for example. But certainly right now, there needed to be a repricing given the magnitude of the shock coming from the tariffs.
Talk to me about where we go from here.
I mean, it's tough because in some ways we were already expecting tariffs. It's not as if this is coming out of left field entirely, but I think the expectation from a lot of market players was that this was going to be a gradual approach. And certainly that's what Treasury Secretary Scott Bessent was trying to push. This idea of let's kind of make it extractive. So we start from a low base and kind of ramp up. But the idea that, in 24 hours, we could potentially be at 25% tariffs on Canada and Mexico. I think that is kind of that's what the huge news is, and certainly I think China as well. Keep in mind that China has markets have been closed because of the Lunar New Year. So when they reopen, this is the first thing they're going to be having to deal with. What's the CNY fix going to look like in the face of that? What a broader risk assets as far as equities and how they need to kind of be viewed due to their dividend, due to their cash flows, all that. So I think we haven't yet reckoned with that.
Yeah, that's interesting. I know that, Trump said he's going to increase the tariffs if Canada and Mexico retaliate. Canada's Justin Trudeau said that it will be imposing tariffs on the United States. What does that mean for markets as we move forward? I've seen some conflicting opinions from analysts this morning.
Yeah, this is where the idea of a potential trade or tariff war really kind of comes in because Trump, of course, has very preempted that statement by saying, if you guys want to put tariffs on us as a reaction to us putting tariffs on you, then we're just going to keep escalating. Where does it stop? And certainly, I think that some of these things on the good side are probably more one sided because, of course, probably, I would say Canada is somewhat more dependent on some of the goods kind of making its way from the US into Canada. But we have a lot of intermediate goods that kind of go across the border on both sides as well. So I think that there are a lot of challenges here if we do see a tit for tat kind of escalation of these trade wars or tariff wars. And also keep in mind that right now, there's so far no tariffs that Trump has put on Europe, but he has already pointed out that that could very likely come soon.
Yeah. Well, what does this mean, I guess, for the price of Bitcoin? I think right before we started the show, it was down almost 5%, Ether down. I think it was at almost 20%. Um, I mentioned I've seen some conflicting opinions from analysts. Some saying we could go down as low as $75,000 for Bitcoin, and some saying that there would be some short-term volatility, but Bitcoin would eventually kind of regain those losses. What's your opinion there?
So I haven't necessarily changed my opinion just yet, which is to say that at the end of last year, I put out a constructive view in Q1, and I still think that that could be the case. Now, this, of course, complicates things. Certainly, one of the issues that we kind of highlighted was if there are any exogenous shocks, then that could interrupt our outlook. And this is definitely a big exogenous shock. But I still think that probably once we kind of deal with this over the next, week to 2 weeks, you could still be in for a better place in markets. There's still going to be some liquidity unlocks coming in February, for example, people with bonuses. How's that going to change things? But for the time being, I think that, you know, things on the risk asset side, as far as U.S. equities, were somewhat expensive, and so I think in line with everything that's kind of gone on, there's three big factors we have to think about. One, how's the dollar going to be affected here? How's monetary policy going to be affected? And how's U.S. growth going to be affected? On the US dollar side of things, we're gonna price this knee-jerk reaction higher. I don't think that's gonna last, and I think that we will come back towards interest rate differentials, which kinda leads you to part 2, which is what's gonna happen with monetary policy. And very likely, like the Fed has already kinda said that they're in this kinda medium place. I think Powell came off pretty dovish at the last meeting, for example, but they still haven't decided how the reaction to things like tariffs could be, because this is not typically what the Fed responds to. The Fed doesn't necessarily respond to one-offs in inflation, for example, because if you have changes in tariffs, if you have changes in immigration policy and prices go higher, for example, that's not something that monetary policy theoretically can control. The problem is when we get into inflation expectations, because if expectations continue going higher because there's mission creep, for example, and tariffs are a one-off shock, but then people are worried about additional kind of increases in inflation, then that's something the Fed would need to respond to. But I still think that that probability is lower. I don't think that we're in a new regime. I don't think that we're moving into rate hikes, for example. And that leads to the last thing. Are we going to see growth in the US if there's going to be tariffs? And I do think that this kind of, interrupts my more secular view of what's happening in the US economy, because if you just roll it back a week ago when we had DeepSeek R1, I was very excited about the idea that we are going to have a productivity boom. And this is not something new. I think I've been on that view for the last like year or two. But the fact that we had faster, cheaper AI, for example, and potentially localized AI on machines, that was something that I think was kind of being missed by the market, or at least it was missed initially and then it kind of repriced. So I still think that that narrative is intact. So I haven't given up on that idea of like multi-year productivity boom, multi-year kind of positive environment for risk. But certainly this makes it tough because, I think we were probably already going to be in for a grind higher, but now it looks like it could be a dip. That dip could be bought, and then we would probably move up again.
I know that you don't like to give me prices, but if we did dip, how low could we go?
That's the big question. And we've been seeing a lot of people put out expectations somewhere between like 70, 75. I tend to think the floor is higher for Bitcoin. Like right now, I think it's already kind of testing that 94 to like 90 kind of level. I would have guessed that the floor was closer to 85 to 90. But again, that depends on what's going to happen over the next 24 to 48 hours. Because again, like anything could still happen. Tariffs could just be like maybe like, Canada and Mexico could actually say, like, you know what, we're gonna cave, we're gonna give in, and or Trump could just pull back from this because all this is supposed to go into effect at like I think 12:01 a.m. on Tuesday. So there's a lot that could happen. I think a lot of people think that this might already be set in stone, but I don't actually think so. I think that we could still change. That there could be a response coming from one of these other countries, or Trump could kind of pull back from this and said, "Listen, like I've been talked down, but you guys have to give me something, or it's going to go into effect by the end of the week," something like that. So I'm not entirely sure what's going to happen on that front.
Now, before the tariffs, if we look maybe to a week ago, we were all talking about the White House executive order, and looking at catalysts in the year ahead. They were very positive. What are the catalysts you're looking for if we kind of sidestep this conversation that we're having now?
I still think that the idea of Bitcoin as a strategic asset, I think, is going to be very much a topic of conversation internationally. So the timeline of that is uncertain because we've been getting kind of headlines from this country or that country, or the Czech National Bank, or Brazil, or Germany, all kind of talking about the potential for a strategic national reserve. And of course, in the US, that's become a national digital asset stockpile. People are trying to parse what that means. Does that mean additional like Bitcoin buying or crypto buying, or does that mean that people are just going to sit on the assets that they already have? I think that the discussion, like, it's kind of a moot point. It's less the idea of like, are they going to be going out into the market to be purchasing stuff, but the fact that if like the first like mover comes into this and actually says we're going to have a strategic Bitcoin reserve or we're going to have a digital asset stockpile, I think that's going to be a hugely bullish signal. And so I think that right now it's a measure of game theory. What's going to happen over the next 6 months? Which country is going to move first? But it's really become a strategic concern, a strategic kind of decision that countries are making. So I think that still like very much sits there for me as one of the more bullish ones. Locally in the US, I mean, certainly I think the change in the regulation, I think is going to be very positive. We've seen now that the like SEC crypto task force as well as the crypto council are both going to be exploring the possibility of either a stable coin or revamp of Fit 21 over the next 180 days. So there is a deadline for that to see that actually happen. So I do think that that's very positive. And ultimately, we've already seen a lot of progress happening on this side. So I wouldn't discount it. Certainly, I think the SEC has priorities of including in-kind creations, redemptions into ETFs. What's going to happen with some of these single name ETF names, like your Litecoin or Solana ETFs, for example, and then potentially adding staking, which is a complicated ask, but certainly one that Hester Peirce is exploring.
That Litecoin ETF is really interesting. I know that you recently wrote in your latest report, or maybe one of your latest reports, saying that the approval could have second order effects for crypto assets with similar mechanics. Talk to me a little bit more about that, because the approval of a Litecoin ETF is not doesn't wouldn't follow the same, I guess, process as a Bitcoin and Ether one.
No, that's a big difficulty because when Bitcoin ETFs were passed, or like the spot ones anyway. I mean, they were basically forced upon the SEC by the court decision because they were acting in an arbitrary and capricious way with respect to surveillance sharing agreements and market manipulation. And the court said, well, if you approve the futures, then you need to approve the spot. And so, really, it was predicated on the idea that the correlations between the spot product and the futures product were so high that if they already approved the futures Bitcoin ETF, they had to approve a spot Bitcoin ETF, for example. Now, for many of these newer ETF applications like Litecoin, like Solana, like HBAR, for example, they don't necessarily have those future analogs. So, I mean, there's very likely like the possibility that the CME will start to introduce some of these things in the near future. But for the time being, there's nothing to kind of point to and say, well, look, the Solana CME futures correlation to the Solana spot is X. So therefore, we need to approve this. I mean, that would also predicate the idea that you need to approve like futures ETFs for Solana. But without that, will the SEC be forced to go into surveillance sharing agreements as a case and kind of use that as the way to allow this to be approved? I doubt it, to be honest with you. I don't think that's the route that they're going to be going, but we will need to see that the SEC will have to come up with some other rationale in order to get this approved. The other thing is, like previously, like they used all 240 days, which is allowed to them to actually get these approvals done. But more recently, we saw like the Bitcoin ETH kind of mixed ETFs getting approval within like about 40 days. So some of that timeline could actually be a lot faster than what we saw previously.
All right, David, we do got to wrap it up, but I have to ask you, what do you think the next ETF approval is going to be? If not Litecoin, I know there's been a lot of talk about a Sol ETF. What do you think it's going to be?
Oh, that's not on me. I really wish I could give you a great answer for that. But we've seen that, of course, like the race for who's going to get the most market cap after Bitcoin, it's definitely not fixed at this point. So certainly, I think that's going to factor into the decision that the SEC makes.
David, thank you very much for joining the show today.
Thank you very much.
And thank you to our audience who watches and listens to Markets Daily. If you don't already do it, subscribe to the CoinDesk podcast network that is available on all podcast platforms. If you prefer watching, we are on YouTube. Subscribe, give us a thumbs up, and we'll see you tomorrow.